Let's talk earnings. Dangote Sugar released its financial statements for full year 2020 over the past 24 hours. The Nigerian company recorded double-digit revenue growth of 33% year-on-year to 214 billion naira in 2020. We can see gross profit up 40% versus last year, operating profit 48% increase, the profit before tax 52% jump, and profit after tax up 33% to 29.7 billion naira. So talk about that further with Temitayo Peters, who is an analyst with ARM Securities. Temi, thank you so much for joining us. Good afternoon to you. So when we look at, I guess, try to dig into some of the drivers behind Dangote Sugar's revenues for 2020, what do we see? What was behind some of those numbers?
Thanks for having me again, Rotus. It's always a pleasure to be here. When you look at numbers, the first thing you have to look at is the sales of their 50 kilo bags. Those are their corporate sales. That accounts for over 90% of total revenue. So you want to be looking at how that performed. For the full year, we saw that was up about 35%. So that was the main driver there. We also saw retail sales was up, similar numbers, also up 35% for the year. So those were the two biggest components of their revenue there, and so those had strong growth over the year, and that's what drove the overall revenue picture.
And as far as their, I guess we saw a 49% jump in the company's other income to about 907 million naira. Any idea what was behind that increase?
Other income, I think looking at for Dangote Sugar, that was the two biggest components there for the other income had to do with sale of scrap and also provisions no longer required. So they had previously made provisions for audit purposes, and then after their full year audit, they no longer needed those provisions to be made. So they just put that back into other income, and then that just accounted for the increase we saw. There was also some insurance claims there as well. So, but the sale of scrap and then provisions no longer required were the two biggest components for other income for the year.
Great stuff. So what are costs? I think we're going to talk about revenue. What about the company's costs? We saw increases in their cost of sales. Well, what can you say? What's your analysis of the cost increases that the company faced?
Again, increase in cost, that's no surprise. We're talking about high inflationary environment, so we expected that. So raw materials, which is where again you see the effects of that high inflation, and also the FX devaluation, coupled the two that happened last year. We saw raw materials go up by 35% for the year. We also saw an increase in overhead costs, about 16% higher compared to 2019, and also labor costs as well. But again, the inflationary environment and FX devaluation are probably the two main culprits for that increase we saw.
Thank you for that. Speaking of FX devaluations, notice that I think their finance costs jumped about 271% to 1.9 billion. Can you attribute some of that to the FX movements last year?
Yes, of course. If you do a deep dive into their numbers, they talk about how they've made a larger net exchange loss from ordinary business. So that would just relate to the valuation and just the losses they've taken there. And also, if you look at our finance income, just to bring that on the topic of interest income and expenses, we see that declined as well. And again, there's lower yield environment last year. So again, that was expected when you compare it to 2019. Everyone knows how yields were much lower last year. And even at the point in time, I think yields were down 1% for some instruments as well. So that makes sense for them to have lower finance income.
Okay, excellent. That does make a lot of sense. Thanks for explaining that. What about the, I guess, any gains from their merger? I think it was Savannah Sugar. Do we see any gains from there? I guess as of when it became one full unit.
There will probably be some efficiency gains. They have a conference call with them on Thursday, so they'll be discussing the numbers. So we'll probably try and get exact numbers, but then there will probably be some efficiency gains realized. But what we're talking about their subsidiaries, they did in their accounts, they did mention an impairment from their investment in Niger Sugar. So there was an impairment of about 900 million, let's say 900 million there from that investment as well. So that also had, slight numbers, but it also had an effect there on their numbers. But then in terms of the Savannah one, that's something we'll get more clarity on from management when we speak on Thursday.
Okay, excellent stuff. How do you see operations playing out for the company in this fiscal year for 2021?
Okay, I mean, like we mentioned, there was strong revenue growth. I think this is the fastest revenue has grown since 2016, I want to say. So that was a strong year for them. But then what you have to remember is what really helped them out the year was the fact that the border closure. Because of the fact of the border closure, there was, before they closed the border, there were issues with people smuggling in sugar and that affecting their sales volume and all that. But then now as we know, the border was open again in January. So that is something to keep an eye on, with how this would. So it's hard to expect them to keep on the kind of incredible sales run we saw over the last year and a half. So we expect that could eat into that. But then, again, managers provide more clarity over the years to see if there's something they've done to be able to withstand the pressure from smuggled sugar and all that. But then if there's any company that we can expect to have answers to the issue of smuggling and how to circumvent that, it will probably be Dangote. So we look forward to hearing what management has to say on that side. In terms of costs, inflation is still getting higher, so there will still be pressure on that side. Inflationary. I mean, there's also been talk of another devaluation as well, so there will still be cost pressures to come. But it's been encouraging that I know, because I cover consumer sector, you see a lot of other companies where they're struggling to manage their cost. Cost is growing faster than revenue, so you see that affecting their margins. But Dangote seems to have that, or so far seems to have that under control. And so we just expect that to continue. Obviously, management provide more color on how they want to, deal with the border openings, whether they're worried about more smuggling and how they want to face with the cost pressure as well. So, but then I'm positive they will be able to meet these challenges head on.
Fantastic stuff. What's your take on the stock as far as the operations are concerned? Buy, sell, hold. Do you have any thoughts on the Dangote Sugar stock?
I'm currently on a buy. I haven't really given a new fair value estimate again because I just want to get some clarity from management on Thursday. But it's a buy. You can't really put anything else after seeing these impressive results. And it's not just last year, not just Q4, I mean, all of last year, they've been just encouraging signs just all across the balance sheet. And so as of now, we have a buy on the stock.
Great stuff. Okay, finally, Lagos accounted for about almost half of their revenues. You think maybe they would look to diversify that, or is just Lagos what it is, commercial capital of the country, and expected that most sales would come from this state?
There is that, there is the fact that it is commercial capital. They are maybe second most populous city or first, depending on who you ask. And so it does make sense that it does account for the bulk of their revenue. But they would try, I'm sure they would try and diversify that where they can. It might not be possible, with all the manufacturing and all that. Like I said, manufacturing accounts for a big chunk. And if a majority of that is happening in Lagos, there's not really much else they can do. They sell their products where the demand is.
Exactly. Now, real quick, I think we're going about 30 seconds, Temi. Are you as optimistic for the rest of consumer goods as you are for Dangote, or is this just a special case with how well they handled their operations last year?
This is a special case. This is special for Dangote. I'm not optimistic about the sector as a whole.
Temitayo Peters, analyst at ARM Securities. And Temi, thanks for coming in. Really appreciate seeing you today. That's going to do it for the Global Business Report. Do stay tuned to Arise News from all of us. Thank you so much for watching. Thanks for your company. I'm Rotu Sodiri.